What's good, everybody? It's your boy 8X, and welcome to part 3 of the Beginner's Guide Trading Playlist. In part 1, I explain how candlesticks are a key technical tool that reveals the battle between buyers and sellers. Candlesticks help us determine who has control in the market. Now, how do we actually know who's in control at any given moment? And that's exactly what we're going to be breaking down in this video. The key to understanding control comes down to the open of the candle, what I like to call the flip of the candle. And this refers to the moment when a candle shifts or flips from bullish to bearish or bearish to bullish. So when price is trading above the open, the candle is considered bullish and you'll see it turn green. And when price is trading below the open, the candle is considered bearish and you'll see it turn red. This is a simple but powerful concept, and when you combine it with multiple time frame analysis, it becomes even more valuable. By looking at higher time frames, you can see which side, buyers or sellers, have more control. And the more time frames that align in one direction, the stronger that side's dominance. For example, if we look at a stock at the daily, weekly, monthly, quarterly, even the yearly time frame, if this stock is trading above the open on these time frames, we know that buyers are fully in control. And this is what we call full time frame continuity to the upside, meaning that the stock is in an overall uptrend. And in this case, you'd consider taking long positions since the momentum is with the buyer. And if you check out a chart, you'll notice more green candles than red. The opposite is also true to the downside. If a stock is trading below the open on the daily, weekly, monthly, quarterly, and the yearly time frames, sellers have full control. And this is known as full time frame continuity to the downside. And it signals a strong downtrend. And in this case, consider opening short positions since sellers are dominating. Again, if you look at a chart, you'll see more red candles than green. Let me show you. Last week, Thursday, we saw QQQ flip the month, quarter, and the year back red when it was about $1 away from triggering that outside month. But mind you, the day before, the month, the quarter, and the year was actually green. And let me show you. If you use the replay tool, and if we take it back the previous day, you'll see that the month, the quarter, and the year was red. Well, why is that? The quarterly flip, it was at 5/14/30, and the monthly flip was at 5/13/47. Remember, the flip is where we flip from bullish to bearish or bearish to bullish. And if we look at QQQ on the daily, monthly, and the quarterly time frames, you can see that these levels were actually the levels that flipped the candle from red to green. So if we use the replay tool again, on the day before, on Wednesday, February 26th, you can see that QQQ was green on the month and green on the quarter. We were a doji on the month and a doji on the quarter, and then a day later, we got that flush to the downside that turned QQQ red on the month and red on the quarter. That level, 5/14/30 and 5/13/47, is very important because that determines who's in control on the higher time frame. Let's take a look at SPY. So here was SPY last week, Thursday, and you can see that we were full time frame continuity to the downside. Now the monthly open for SPY was at 592.67, and you can see that the quarterly open for SPY was at 589.39. Now a day later, we saw that relief bounce for the indices, and you can see that we flipped back. Green on the month, green on the quarter, still red on the week. But look how important this area is that it lets us know who's in control. Above 592.67, we see that buyers have some control on the monthly and quarterly time frames. But below that level, we are back in full time frame continuity to the downside, just like that. Another example is this MasterCard trade that I took. So I took a put position in MasterCard and I was aiming for this gap fill. Now it ended up being a good trade because I was able to secure about 37% on the initial trim, but I was targeting the gap fill to the downside. But pay attention to the monthly flip or the open of the month, which was at 552.64. Now, when price was heading towards that gap fill, you can see that we rejected right at that monthly flip, and look how strong the rejection was on the day. We were able to go outside day to the upside with a hammer. Now, that just reinforces the fact that buyers did not want that monthly to flip back red. And what did they do? They held that open and you saw an immediate reaction off of it. We often use the flip of the candle as support and resistance levels as well. As a result, the stock continued to make new highs for the rest of the week. Understanding who's in control will help you make better trading decisions. When you trade in the direction of buyers or sellers who have control across multiple time frames, you increase your probability of success. So make sure you're always labeling the flip of the candle on your charts. It's a simple but effective way to stay on the right side of the market. Thanks for watching, and don't forget to like, comment, and subscribe for more trading insights. I'll see you in the next video.